Hey Faizan, I just found out I owe over 70,000 pounds in back taxes and I don't even know how that happened. That's what a new client that I recently onboarded told me. And guess what? She's not the only one. She's a content creator and recently started going viral and now banks about 20 to 30,000 pounds a month, but no one ever explained to her what happens when your income takes off. Now, when you work for yourself, there's no payroll team taking tax off you. You get paid and you think the money's all yours, but behind the scenes, if you're not tracking your obligations, tax builds up really fast and quietly. That 70,000 pounds wasn't just a fine. It was a combination of unpaid income tax, national insurance contributions, VAT, interest, and penalties, all because nobody ever explained to her what to look out for. So let me explain how this happens, because if you're earning over 6 figures online, you're probably next. Number one, payments on account. If you're self-employed and owe more than just 1,000 pounds in taxes, HMRC assumes you're gonna earn that much again. So you have to prepay next year's tax in advance, 50% due on 31st of Jan every year and another 50% due on 31st of July. So let's say if your tax bill is about 30K, you're actually paying 45K within the next 6 months. Number two is value-added tax or VAT. If your total sales, brand deals, courses, client works, whatever hits 90,000 pounds, in any 12 months period, you must register for VAT. That's the law. Once registered, you have to file VAT returns every single quarter and pay what's due. And if you don't register on time or miss your filings, HMRC can actually go back, demand years of unpaid VAT, interest and penalties backdated from when you should have registered. Here's how to stay out of trouble and actually feel in control of your money now. Step one is know your status. Are you self-employed? You're likely under self-assessment plus payment on account over 90,000 pounds turnover. You must register for VAT. Step two, you gotta automate your tax savings. Move 30% of every single payment in a separate tax account immediately. This covers income tax, NI, corporation tax, and even VAT if it applies. Step number three, really important, consider switching to a limited company. Once you're earning over 80 to 100,000 pounds a year consistently, switching to a limited company can reduce your tax bill, let you pay yourself via salary and dividends, and protect your personal assets, give you more flexibility with pensions and expenses and investments. It has to be done right with proper setup and advice. Step number four is lock in your tax calendar. 31st of Jan is filing plus pay your self-assessment plus pay your first payment on account. 31st of July, second payment on account, and VAT are quarterly filings due first month plus 7 days after each quarter end. I always say if it's not in your diary, it won't be in your bank. My name is Faizan. I'm an ICAW qualified chartered accountant and founder of Innovative Consulting. I spent 13 plus years in the world's biggest accounting firms. Now I help content creators structure their money, save tax, and stay compliant without getting overwhelmed. So if you as a content creator started earning well, but no one's ever explained payments on account or VAT registration to you, this is your sign, because the more money you make, the more expensive it gets to not understand tax. Hit that like and subscribe button and drop a comment if you have any questions. I'll see you in the next one.